Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Tuesday, July 20th, 2010. Let's begin with the euro-dollar pair, which tested resistance at the 1.30 level overnight, the third straight session it has done so. Following a rejection of that level, the pair declined as investors cast cautious eyes towards European bank stress tests, and there were reports that the nationalized German lender Hypo Real Estate has a possible capital shortfall of 2 billion euros under adverse circumstances in the tests. Zooming this pair out a bit, we see that we still remain within an upward sloping channel, but with the upcoming stress tests, euro gains may be capped for the week. If instead we see some correction and consolidation, we may test the upward sloping level of support, or the 200 period moving average, or even an important level of resistance turned support around the 1.27 level. Taking a look at the pair from a daily time frame, following a very strong rally in the past 2 months, from the more than 4-year low of 1.19 to our current level around 1.30, some period of consolidation may be due before the euro rally continues. As you can see also from our momentum indicator here, the RSI, we are entering overbought territory in this daily time frame. The greenback also extended its gains against the pound overnight, as the pound-dollar pair stayed within a short-term downward channel. The pound was weaker after a UK government report showed that the government borrowed more than expected in June, with central government tax receipts increasing at a much slower pace than in previous months. However, we did see a strong bounce up from the 1.5160 level, mitigating most of the gains in favor of the greenback overnight during the New York morning session, as we had a bounce up off an upward sloping support trend line, but also a 61.8% retracement of the recent rally in this pair. US stocks, which opened sharply negative, cut into their initial losses in the early New York morning trading, which may have helped swing sentiment in favor of higher yielders against the greenback. Zooming the pound-dollar pair out to a daily time frame, we see that we had pushed above an important resistance, downward sloping resistance trend line in last week's trading, and now we are retesting it as support. If we remain above this trend line, that could be a bullish indication for the pair. We also have an important resistance level coming up on the upside at 1.55, which was our highs in mid and late April. Moving to some fundamental data, we had the Canadian Central Bank decide on interest rates, and it increased rates by a quarter point to 0.75% in line with expectations, though it was accompanied by a cautious statement. The bank said that further rate increases would be weighed carefully against domestic and international economic conditions, and it cautioned that the global recovery was proceeding but was not yet self-sustaining. The bank also cut its 2011 growth forecast to 2.9% from 3.1%, as well as revising lower its 2010 forecast. The decision leaves considerable monetary stimulus in place, consistent with achieving the 2% inflation target, in light of the significant excess supply in Canada, the strength of domestic spending, and the uneven global recovery. Following the release, the US dollar-Canadian dollar pair rose to test its resistance at the 1.0585 level, but as US stocks managed to pare their initial losses and oil prices rose in today's trading, we saw the Canadian dollar pare its losses and move down to the 1.05 level at around noon New York time. A move below our support for this week, around 1.0485, could lead to further declines in the pair, with our support coming at 1.0280, while a move above our resistance for this week at 1.0585 would target the 1.0670 level, as this pair has been range trading throughout the last several weeks. Now, on a day when riskier currencies generally decline against the dollar, at least overnight, the Australian dollar managed to gain against the US dollar after Reserve Bank of Australia Governor Glenn Stevens confirmed Tuesday the August 21st federal government election won't dissuade the central bank from changing interest rates if it needs to. The RBA's policy-making board next meets on August 3rd, and minutes of the RBA's July 6th board meeting suggested the RBA's second quarter inflation data on July 28th and the result of European bank stress testing will be key to any interest rate decisions in August. Therefore, with a chance of the central bank raising interest rates, the Australian dollar gained in the overnight session, and after pairing some of its initial gains, was again retesting its daily highs around the 0.88 level as of noon New York time. Now, U.S. stocks opened heavily negative as we had some disappointing housing data from the U.S. Housing starts dropped by 5% to a seasonally adjusted annual rate of 549,000. That was weaker than expectations and brought housing starts to their lowest level since October of 2009. As we had seen, new home sales had collapsed by 33% in May as buying dried up because of the end of a government tax credit for first-time purchases. With the unemployment rate remaining high and builders facing competition from cheaper property in the used housing market, the construction sector should continue to struggle. The housing market struggle in general will hamper the overall U.S. economy, and the second quarter is expected to show a rather mediocre 2.1% growth rate. Yet, in one sign of hope, the report did show that June's building permits increased 2.1% to an annualized rate of 586,000, better than economists had predicted. In a look at our final pair, we see that in the US dollar Japanese yen, the dollar continues to edge higher against the yen following its steep declines to end last week. The pair managed to push above the 87 level, an important level of support that was cracked late last week, and currently the greenback has managed to stay above that important level. So that's it for today's fundamental and market highlights. The upcoming fundamental docket is rather light. Tonight we're going to see meeting minutes from the Bank of Japan as well as a measure of leading indicators from Australia. Overnight we get the Bank of England meeting minutes, and tomorrow we get a measure of wholesale sales from Canada as well as the 2 p.m. Fed Chairman Bernanke testimony to Congress. And that will wrap up today's broadcast. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you great trading.